So I'm talking about the Norwegian Sovereign Wealth Fund, which is called the Government Pension Fund Global, because there's also not a national one, but the global one is the universal investor. So it's $1.3 trillion at this moment. So it's one of the largest institutional investors out there. And it's invested in 9,000 foreign companies. We don't invest, it doesn't invest anything in Norwegian companies, only foreign, which puts it in a very special position. And it's owned by the Norwegian people. Ministry of Finance decides on the investment strategy. And then it's managed by the Central Bank of Norway, the NBIM part, the division, the management. So Norges Bank Investment Management is the one that runs it. So I wanted to add to that when I spoke about this, when I went to Singapore some years ago, they talked about that the Norwegian one was a maverick because it was so out there compared to all the other sovereign wealth funds. But now I think it's become a lot more standard in the way it operates. A lot more companies, pension funds and others are doing it. Sovereign wealth funds, however, I'm not sure how many are doing it, but it's definitely, I think it still is a gold standard for sovereign wealth funds. Anyway, the idea is to achieve maximum possible return, and it's contingent on sustainable development and long-term horizon, as we've talked about before. And it's intergenerational, so it's supposed to benefit present and future. So transparency is important, and it's responsible, and it also has ethics guidelines. So it doesn't have any earmarked pension or other liabilities, and it promotes a well-functioning market. And the idea is to, with its ownership, to effect positive change. That's also part of the mix. So when it comes to ESG and this Government Pension Fund Global, it's focused on, it has disclosure documents. So you have climate change expectations, and then you have other expectations on children's rights, human rights, water management, ocean sustainability, anti-corruption, tax, and transparency. And those two last ones have come up more recently. The climate change, I think, was already in 2009 or something like that. And they use a lot of these principles that we've already heard mentioned, TCFD, PRI principles, and so forth. Then there's the engagement. So they use that a lot. And there are actual meetings with 600 to 800 companies where they go in depth. So portfolio managers do connect with companies. And then there's dialogue with 1,500 companies, something like that, where they do connect with the largest companies and the weakest one, where they're weak on ESG specifically. And then at the AGM or the annual general meetings, they disclose what they voted ahead of the vote on occasion, but mostly it's after the fact, the day after they voted. And all of this is available on the website for this fund. So you can look up what they voted, and when they voted against something, they explain why. So it's quite interesting, and I don't know if all pension funds or other institutional funds do that sort of thing. So that's kind of interesting. And also, as a responsible investor, for 21 years, it's had a return of 1.1% on average per year, totaling 87 billion kroner, which is about $10.7 billion right now. And then they also have environment-related investment mandates, so low emission energy, clean energy, and so forth. And the latest is that on April 7th, so just 3 weeks ago, they bought into Ørsted, a Danish company that has a wind farm offshore from the Netherlands. So they're 50-50, and they paid $1.6 billion for that. So that's the first movement into unlisted renewable energy. First move to actually doing that sort of project. And then as far as divestment goes, so they try and nudge and prod and push the companies to do the right thing. And if they don't, then the final solution is divestment. So they do have that option if they're not operating with a sustainable business model. And they have, for instance, divested for palm oil producers because of deforestation, oil sands in Canada with emissions, and oil and gas producers, but only the ones that are upstream producers. The ones who do some renewable are not divested from, but the other ones they have divested from. So this is all just changed over time. Nothing's been like this from the get-go. So it's obviously just evolved and definitely moved, in my estimation, in the right direction. So we'll see where we end up. And then the one thing that started in 2004 that also makes it look different from some is that they have these ethics guidelines, and that's a little bit like the original that we talked about in other talks these days about the sin, tobacco and so forth, where you exclude companies because of what they're producing. So they have that for violations of fundamental humanitarian principles, human rights, gross corruption, severe environmental degradation. For instance, we said tobacco. And then on the behavior side, the more recent that they've done is acts or omissions that on an aggregate affect the company level, leading to unacceptable greenhouse gas emissions. And it's an independent ethics council that actually comes with recommendations, and then the final say is with the central bank, the executive board of the central bank. So this is separate from NBIM, which is the Norges Bank Investment Management. So they work together with this ethics council. So they'll connect with the companies, they'll talk, they'll connect and see where they're at, sort of thing, so they can work it out together on what happens. And sometimes it's not an exclusion, it's put on observation, so then they get a chance to clean up their act. And if that doesn't work, then it can be exclusion. And some have been excluded and then brought back in, like Walmart, was actually excluded in 2009. And that was labor-related issues in the US and Mexico. And they were brought back in 2019. So that's kind of interesting. And as far as future goes, there's a commission now that's been appointed to look at the green transition, how that's and climate change will affect the pension fund. So they want to see more close up what this looks like. And then just the 22nd of April, they came out, published, NBIM did, so the fund, Investing with Company Insight, a 20-year review, which gives a good insight into what they do and how the teams work with the portfolio managers and such. So I thought you guys might want to pick up or look up that on the website. So I think I'll stop there, leave some more time for questions.